How does whole life and real estate investment together give
Hmm.
security and passive income, not only today, but during your retirement?
Well, I think look at it like this this is a hard one to touch on very briefly because there's so many layers of depth to it and so many nuances about the numbers, right? And so
Mhm.
the idea, I think if you understand that leverage is always valuable in real estate because real estate is not a great place to keep your liquid assets, right? Like so the net worth, if you have equity in your home, right?
Right.
That's not a great place because it's not always easy to access the equity. By
Absolutely.
having money in a whole life policy and by paying for the house with a whole life policy and using cash flow from the real estate investment to pay
Mhm.
back the whole life loan, you're recapitalizing your own bank. You're never interrupting that growth. And we always have to think about things in the terms of opportunity cost. That's what if you pay cash for your house, there's an opportunity cost on what that cash could have done for you had
Mhm.
you just financed it completely. And if you finance it completely, obviously there's a cost of borrowing. And so you as a real estate investor have to consider and contemplate the different variables of opportunity costs of what are the rates, what are the terms, what are the different options of capital? What are the down payments you have to put into it? And that's my favorite way to look at it is I want to leverage a bank as much as possible. If they'll let me finance a house as long as possible, I will. Right. For the deal I did in the Dominican, there's no financing. So we needed to, access capital and do it differently, which, this opened up, that opportunity. But for places in the US where you can,
Mhm.
there's an opportunity cost for the down payment. When you got to put 25% down on an investment property, when you pay cash for that property down payment, that 25%, let's say it's a $1 million property, you got to put $250,000 down cash. There's
Mhm.
an opportunity cost on what that $250,000 could have earned you instead of being just trapped inside of the investment property. And so
Right.
what by flowing it through the whole life policy first, you eliminate the opportunity cost because even though you have that equity in the house and what and or in the property, the
Mhm.
money is still growing inside of the whole life policy while it's been deployed to help you acquire that real estate property. So like there's literally not another asset in the world that can do it this way. And I always tell people it's not about the rate of return in the policy, it's about all the efficiencies
Mhm.
and increases of efficiency by a couple percent here, a couple percent there on these big purchase prices over long periods of time. If you can increase your overall cash flow and financial efficiency by 1 or 2% over your entire lifespan, then it's so impactful rather, of creating these big results without having to worry about trying to chase these big returns. Just by increasing financial efficiency, you can reach your goals faster.